A tale of two coasts. As we get ready to say farewell to 2023, we want to take the economic pulse of the nation, looking at our East Coast and West Coast. Now, today our focus is the housing sector. In a positive sign for the market, U.S. new home construction unexpectedly jumped in November, with housing starts up 14.8% from October and 9.3% from a year ago. This comes as the Home Builders Index bounced back after 4 months of declines, rising 3 points in December. And looking regionally, homebuilder confidence declined everywhere except the Northeast. So how is this impacting the mood from coast to coast? We have Francis Katzen, Douglas Elliman, founder of the Katzen team, and Jessica Lautz, the National Association of Realtors Deputy Chief Economist and Vice President of Research. Welcome to you both. So Jessica, I want to start with you because obviously we hear a lot about the price, especially in California. But talk about some of the things that led up to this. Obviously, beyond inflation and affordability, this was sort of already in the pipeline.
Yeah, California is a really interesting market. There's a lot of demand to live there, but there's very limited housing inventory. There's high earners, but they're very expensive homes. And we know that it's very difficult to bring new housing inventory into the area because there are laws like density restrictions that restrict buildings. So it is very hard, especially for a first-time home buyer, to break into that market.
Francis, when you think about that compared with what you're seeing in the Northeast, I mean, it seems it's an interesting dynamic, right? When you think that California in some ways almost feels so much more than what you're seeing in even places like New York City because the ceiling has been there for some time. What's the pulse right now in the market?
The million-dollar question. We're seeing a lot of change very quickly. I mean, the 10-year Treasury yield dipped below 4% this week, which essentially put the rates right into a ricochet of adjustment. Just yesterday, we were down 0.20% and the day before 0.30%, which meant the 30-year fix went to 6.5 from 8, which immediately pushes, I think, many people who've been sitting on their hands back into buying. And also the fact that we've seen the first rental decline in 27 months is staggering. I think that's sort of opening up information about people wanting to get back into purchase power here in New York.
And so, Jessica, to bring you in then, because I know we talk a lot about how expensive things are, but break it down for us in terms of multifamily sort of demand there and what we're seeing with those trends as well.
Yeah, absolutely. So multifamily building has been up quite a bit in the last couple of years, but we have to recognize as well that in the midst of the summer, right as rates were going up in 2022, there were actually bidding wars for rental units because people could not afford the home buying market at that point. They didn't get a home successfully under contract before rates went up too high to push them out of the market. And so then we knew that those consumers, especially first-time home buyers, were facing perhaps a home price, a monthly payment that was $1,000 more per month at the peak versus the valley of interest rates. Now that they're coming back down, that is certainly encouraging signs for home buyers. And perhaps there will be some people who decouple from their roommate situation or living with family, and they're going to move into that home buying market. That's going to put a lot of demand into the market and a lot of pressure for the limited supply. So it's very encouraging to see that home builder confidence is actually going up.
Jessica, Rachelle alluded to sort of the history, at least in the state of California, where the building simply didn't keep up with the population growth. Now we're seeing a population decline, and yet there's still not enough inventory to meet demand. We saw a number of regulatory changes that happened this year. One that particularly stood out to me, that the shift in ADUs, allowing homeowners to sell ADUs they've built in their own backyard. To what extent does that ease the demand in the market?
Mm-hmm. I'll jump in there. So, I think that this is really interesting, this dynamic of ADUs, because it helps a lot of people who are living in a multifamily situation. So perhaps a young adult who's boomeranged back after college, who can't afford the rental market or wants to get ahead on their finances, but also thinking about elderly parents who don't want to go into a nursing home, especially after the pandemic, who want to stay with family. And so this allows that, but it also allows for a rental unit for that family to actually have income. And that passive income can be very helpful to a family to even pay off their own mortgage.
And so, Francis, to bring you in on this, then obviously California has a wave of legislation when it comes to real estate. Are we seeing anything comparable to that on the East Coast? What are some of the states there that are leading the way?
I think that we're starting to see that there's a big conversation going on right now about LLC and the transparency factor of whether or not that needs to change. And I think Governor Rachelle has been waiting until the end of the year to decide if she's going to pass on that. I think it's a big conversation right now for investment in New York. I think that legislation is huge as it relates to parking cash in New York City. I think it will impact tremendously people and how they allocate their money and park and investment here in New York. I think New York in general has been sort of in a malaise due to the fact that inflation and cost, as well as impact on rates. But I think I'm going to say that New York is going to turn much more quickly than I expected based on what I'm seeing even this past week. I did not expect to see these types of reductions, especially in light of the fact that the Fed met for 3 weeks consecutively this week and decided not to raise. So I think 2024 sales in Manhattan is going to definitely shift the expectation in a positive way.
Frances, when you think about a place like Manhattan, I mean, multifamily units, apartments, I mean, that seems sort of par for the course, right? If you live in the city. When you look nationally, though, it feels like that's where the trend is going. The opportunity to buy increasingly in condos, in townhomes, as opposed to single family homes. Is that what you see? Is that the shift that's happening in the market that maybe New York sort of set the trend for?
No, I think in New York, people are still wanting to, they want to diversify. So let me be clear, Akiko. I think they want to be able to have income producing product. So they are looking at multifamily. But as an end user per se, I think that these folks are very focused on taking advantage of a sort of a depressed pricing market and getting up and taking more market share if they can.
And Jessica, in terms of the flow that we saw, obviously during the pandemic, a lot of people relocated. Now a lot of people either returning to work, returning to perhaps being called back into their offices as well. How do you see that dynamic playing out on the East Coast?
So I think there's always going to be a demand for city centers. They're dynamic. They have a lot of amenities. But I think we have to remember, too, that a lot of people can't afford them. So actually, when we look at our forecast and the top 10 markets where we think that there's a lot of pent up demand, we're actually seeing places like Portland, Oregon, Philadelphia, Harrisburg, Pennsylvania could be very attractive, as well as Washington, D.C. Now, D.C. is an expensive city as well, not comparable to New York necessarily, but still a very attractive place to live. And I think that migration flow is going to continue with retirees as well. Looking at Sunbelt areas, we know that those places are very attractive as we think about affordability, the amount of space that someone can actually afford to purchase, positive weather, positive tax situations. So I think we're going to still see migration flow into the Carolinas, into Tennessee, Texas as well.
Finally, Jessica, this question to you. The question I keep asking is, when you look at where the empty office spaces are, I mean, there seems to be a real opportunity to convert that into housing. I know some states have looked at changes in regulation. They've acted on it. Are we going to see more of that in 2024, given where supply is?
It's possible. I think there's a big conversation about it. There's a lot of questions about it. But when we look at our own analysis of how many units have actually been converted, it's not that many. And so I think that there is a demand for that. There is a demand for conversion, whether it's office space, whether it's empty school buildings, vacant malls. But we need to get on that as a country to really bring these residential units into the market for the demand that is going to be here in 2024.
Jessica Lotz, NAR Deputy Chief Economist and Vice President of Research, and Frances Katzen, Douglas Elliman, founder of the Katzen team. Good to talk to both of you today. Appreciate the time.
Thank you.
Thank you.